everyone, my name is Simon Mishevich from Optimised Accountants, and it's finally here. I'm going to be talking about the Labour Party and the manifesto and the attack on capital gains tax. There's been a lot being put out there into the media. I want to give some rationale to what I might think it could be in the future. So let's stay tuned and let's get into this. Of course, the UK is pretty much bankrupt like a lot of governments around the world. So it needs to fund itself. How does it do that? Through taxation. So the Labour Party, of course, have got to start increasing taxes somewhere. And their ambition is to increase taxes through wealthy individuals because they think they can afford it. Not the fact that they'll just leave. But hey, what do I know? I live in Spain. So let's carry on, shall we? So let's get into the detail. Okay, so capital gains tax rates. I want to look at residential property because that's really the kind of the focus here versus non-residential property. So this is commercial property, or we're talking about shares and that kind of thing. So let's have a look at the current rates and possible Labour changes. So we've got the £0, 0% tax-free amounts. So at the minute you have a £3,000 capital gains tax exemption. Can you remember the days when that was 12,000? Gone are those days. And that could be a trend that we see, is that these exemptions could be scrapped altogether. Why could that be? Well, let's think about this. You already get a personal allowance of 12,570. What is this 3,000 all about? Well, it's there to think about inflation, I guess. But really, that is something that the Labour Party could attack, and justifiably so, in my opinion, because you already get an exemption. So don't shoot me for that, by the way, but I can just see natural fits of where they could easily justify some of their changes. Okay, so let's look at basic rate taxpayers, those that earn up to £50,270. If you're selling a residential property, you are going to be subject to 18% capital gains tax rate. Versus non-residential property, commercial property, shares, that kind of thing, you're going to be subject to 10% tax, which, let's think about this, that is half of the tax rate on income tax basis. And you'll notice I'm going to be talking about income tax here because that has been the threat for some time, and I'm going to kind of tell you why that might happen. Earners beyond 50,270, they are going to be subject to 24%, or in fact they are currently, capital gains tax rate for high rate taxpayers, additional rate taxpayers. Now if you're selling non-residential property, it is 20%. Now that 24% was 28%, but it's now been dropped to 24%, so a reduction of 4%. Bizarre why they would do that, and one of the things they could do is stick that up again to 28% and say that was a mistake, which does seem confusing when they're reducing the capital gains tax annual exemption. The Conservatives did some strange things, didn't they? Okay, so I want to look at other countries and almost give you some rationale of what HMRC will be looking at, not just their own policies but also internationally. And I'm a US, UK dual tax qualified, but I also look at other countries' tax as well to help people move from the United Kingdom to those other countries. So I need to know what taxes that they have. So I looked at the USA, Canada, and Australia, mostly because that's where most Brits will move to. So again, we're going to look at other country taxes and how they tax you when selling assets. Again, we are going to look at USA, Canada, and Australia. And in the United States, they have an income tax on selling assets as well as a capital gains tax as well. And income tax will be based on depreciation, and that is because the USA allows investors to have a depreciation on the building, which you don't get that in the United Kingdom. Again, another good reason to invest in the US property market, not the UK one, because you get a better return and you have so many more tax advantages of investing in real estate in the US. In Canada, they charge you income tax. Okay, so this is a trend. It's not capital gains tax, it's income tax, but they do give you a 50% tax credit. And we'll go through an example later on. Australia, exactly the same thing. They will give you 50% tax credit, but they will charge you income tax on those gains. It's not a capital gains tax rate. So we need to also think about the top tax rates in each of these countries. So the US has a top tax rate of 37%, but if you live in California, for instance, then you actually have a top tax rate of 50.3%. In Canada, you have a country tax of 33%, but again, depending on where you live in Canada, you could be subject to income tax of 54%. Which, guys, that is much better than the UK at 45%. Okay, so we should sometimes think ourselves lucky when you see these rates. Australia, you could be subject to 48.5%. There is a 45%, but then they've got some add-ons as well that could take it up to 48.5%. And then you got the capital gains tax rate. Of course, Canada, Australia, they don't have capital gains tax, so they ignore it. The US does have a capital gains tax rate of 20% top tax rate, compared to 24% in the UK. So again, a bit less. But if you look at the income tax levels, you could argue, well, actually a country tax perspective, the UK is higher, but then you've got state and provincial taxes in US and Canada, and Australia is just higher than the UK. So I know that people say in the UK you're heavily taxed. Yeah, I understand that, but actually there are other countries that tax you even more. So we now need to look at an example to see how and if the Labour Party changes their rates, what other countries do. So again, we'll look at US, Canada and Australia. So US, you got a taxable gain £100,000. I appreciate I've used currency of 100,000 across. It just makes it consistent. Canada, you've got a £50,000 charge. And again, that's because they give you a 50% tax deduction, as well as Australia. Now, what that means is that the US would give you a tax rate of $35,150. Again, I did all the background calculations. Versus Canada, that will have a tax rate of $27,000. Australia, $24,250. Again, I'm looking at the top tax rates, and I've done some real complex calculations to get you these numbers. But it shows you that the US has a higher tax position than, say, let's say Canada and Australia. And the reason for that is because they give you a 50% tax credit, which if the UK moves to an income tax perspective and give you a 50% tax credit, I don't think it's going to do them much good. So therefore, will they just ignore the 50% tax credit and just convert it to income tax? That's what a lot of countries are doing. So the UK probably would be just falling in line with that. Tax rate, US 35%, Canada 27%, Australia 24%. If you think about the top tax rate in the UK, it's 24% by selling residential property. It's actually the lowest of all of these countries that we're mentioning. So is there justification? Well, yes, from an international tax perspective, which the UK have always got to look at and say, well, the US will charge you more, so will Canada, and Australia, well, you know, they're charging you on different things. So yeah, we can increase our rates. All right, so here we go. So what I've done now is looked at US versus the UK old rate and UK possible new rate, if that's what they're going to go to. And straight away, one of the things I'm thinking about they'll do is not give a tax credit like they do in Australia and Canada, but they'll just go straight for income tax. Now, 35,150 is barometer. The old UK tax is 24,000, so it's nowhere near enough in the eyes of the Labour Party. So it could go up to 45,000 or 50,000 on income tax levels if they increase the additional rate taxpayers from 45% to 50%. So that's something that could really happen. Moving to income tax levels, I would put my bottom dollar to say that's going to happen at some point, just not sure when. Tax rate, again, then would be 35% versus 24% currently, and now they could double the tax rate for wealthy individuals. And the justification will be, well, we want to bring homes back into the hands of the people, not of the wealthy individuals. Okay, so that'll be the slant, that'll be the mantra to justify increasing taxes on landlords.